All right, traders, it is Wednesday, July 27th, aka the Fed Day. That's right, guys, we heard from the man himself today, JP and the boys. I think the question on everyone's mind is, did the Fed come out here today and put an end to the bear market? And frankly, guys, no one knows the answer, right? I'd be a little bit cautious of anyone telling you, yeah, the bottom is 100% in, the bear market's over. I'd also be cautious of anyone telling you, yeah, there's no shot the market trades higher. We're traders, guys. All that traders want to do is focus on price action. So in terms of price action, the Qs were up 4% today. The S&Ps were up almost 3%. Pretty good action there post-Fed. Now the key, the big test is going to be tomorrow. Typically with the Fed, you get the knee-jerk reaction. Then the following day is the real move. It doesn't mean the market has to fall apart. It just means we're going to learn a little bit more tomorrow. So, I don't know the answer to that question. Did the Fed put the end to the bear market? What I do know, guys, is how to read a chart and focus on price action and structure, which is what we're going to focus on in tonight's video. Alright, guys, we'll dive in here. And of course, in addition to the Fed, we got some big earnings going on. So we got earnings last night from Microsoft. Microsoft up a modest 7% today. We had earnings from Google. Google up almost 8%. So, no earnings destruction out of those two just yet. And then as far as the schedule for the week here, we had Facebook earnings tonight. Facebook 7:27 after the close. Looks like Facebook's trading a little bit lower, down towards 161. Now, I don't think Facebook is going to single-handedly crush the market, but food for thought. Facebook, aka Meta World Peace, a little bit of a gap down here so far. But more importantly, guys, is just the indices. All right, so for the S&Ps here, really good push today, up almost 2.5+%, and we've got 30-minute, 15-minute, 5-minute big three buy signals. Remember from last night's video, the S&Ps were neutral. No buy signals, no sell signals. Lighten up a little bit here. The Qs, who were up almost 4.5% today, 1 hour, 30-minute, 15-minute, 5-minute big three buy signals. The semiconductors, up about almost 5% today, 1 hour, 30-minute, 15-minute, 5-minute buy signal. So the bulls did a pretty good job today of holding structure. They did an even better job of bringing a few big three buy signals into the mix. But here's the biggest thing, guys. And in terms of the question of the hour, did the Fed come out today and basically signal the end of the bear market? Who freaking knows? All I know is if the market has any chance here of getting back to a little bit of bullish trend, however long it might last, we got to see signs of that in the price action. I think one big component is when we get these pullbacks, kind of like you had back, last few days here, the key is whether or not that back test, that pullback, behaves like a bullish trend. All right, so up to this point, we get back above that 21, we squeeze the shorts, your first pullback totally falls apart. Right, the bulls get a big fat F in terms of holding structure. So that doesn't behave like bullish trend. All right, we're back above the 21, we flush. We're back above the 21, we flush. We are back above the damn 21, and we flush again. Right? None of that is the behavior of a market that wants to trend higher. So next couple of days here, that's kind of like the big question. Even if we're going to go into a bit of a rally mode here, it's never going to happen in a straight shot. We got to expect those pullbacks. The question is, do those pullbacks hold? That's where we can learn a bit more about the market. So for conversation's sake, guys, early next week we pull back. The S&Ps just dump under that 21 EMA. We ain't working with a bullish market. We're not working with short-term bullish trend. If they can hold that structure, if those dips find a bid, they catch some buyers, and we keep on trading higher, maybe, just maybe, guys, the market's got a little bit of oomph to it. One big level to focus on here is going to be your weekly 21 EMA. So for the S&Ps, that's around 407, and for the Q-tips, your weekly 21 EMA is up here around 310, 311. So keep this in mind, right? Really, really important level. Let's not forget that we're in a weekly downtrend. Right, so without discussing, where do we go next? What do we see in August, September? Focusing on the present moment, we're in a weekly downtrend. The ebbs and the flows of a weekly downtrend look like this. We're going to flush, typically towards -2. Then you get the reversion to the mean. A little bit of RTM action on that rally back to the weekly 21. That can make for a nice rally. That can make for a nice 2 to 3 week window to try to play that move higher. The key is whether or not we actually get back above that weekly 21. Right? If all we do is kind of rally, run up there to the weekly 21, give it a little smooch on the cheek, right, a little peck, and then fail and fall over, you're still in your downtrend. So not to say that we have to test the weekly 21 EMA. I mean, of course, the market could fall apart tomorrow, but a really big level, guys, where the bulls actually got a better shot here of seeing this market rally into August, maybe September, is if we can start to rebuild back above the weekly 21. Right? That goes for the SMH, that goes for the QQQ, that goes for stocks like Apple, Amazon, the S&Ps. Really big spot there. So all we got to work with for now, which is enough to work with, but we've improved our daily structure. 1, 2, 3, 4, 5, 6, 7 closes back above that daily 21. We got a daily squeeze here with a positive histogram, which technically speaking, fires long today. So we've improved the structure. We've improved the quality of the big 3 signals. Right? We canceled out every sell signal. Now you got a couple lower time frame buy signals, 30-minute, 15-minute, 5-minute. Those are all signs of good progress. When and if we get up there to that weekly 21 EMA, we're going to learn a little bit more. So, I don't know the answer. Did the Fed come out today and signal that they're going to put an end to, quantitative tightening? I don't know. Who the hell knows? What we know, guys, is we can make our decisions based on trend, structure, momentum, and price action. So for now, the way I see things, without trying to look, too far into the crystal ball here, is that, yeah, in the short term, the bulls have made a lot of progress. Structure improves. The signals improve. Right? No sell signals, some buy signals. And then as far as a few pieces of the puzzle here, HYG, the junk bonds, if our market's going to make a sustainable rally, we need to see HYG do a little bit of the same. Right? HYG with the sell signals under that daily 21 EMA, not going to cut it. So the junk bonds, they've kind of improved here. Right? Same kind of improvement. Back above that daily 21. Bullish daily squeeze fires long. Cancels out every sell signal. You got 1 hour, 30-minute, 15-minute big 3 buy signals. So HYG's playing ball here. The toughie so far, guys, is the dollar, the Dixie. If the market's really going to get back to a little bit of bullish trend, right, into September, into August, into September, we got to see the dollar break down here. Right, so for now, this remains one issue for the bulls. Strong dollar means generally a weak equities market. Right? Strong Dixie, weak S&Ps, weak QQQ, weak stocks. So as far as Dixie's concerned, this is a pretty chart. Really good trend, really good momentum. The major thing here we got to do is cancel out that daily buy signal. And ideally we're going to do that with a flush under that daily 21 EMA. If we're just looking at structure for structure, this is pretty bullish. Good trend, nice pop to +2, you get a pullback, squeeze, buy signals, nice rip, you get the pullback, holds up pretty good here. So keep an eye on the Dixie. If that can end up dumping under that daily 21 EMA, it's just an additional sign that, yeah, the bulls have got some good control here. In the short term, we might have bottomed out, and we might get that short-term rally. Really big piece of the puzzle, but yeah, keep it simple, guys. Don't marry your idea. Right? Marry your indicator. Right? Marry your rules. Marry your game plan, but never marry an idea. So for right now, for example, yeah, if the S&Ps and the Qs can hold structure, meaning these pullbacks to that daily 21 EMA, they hold support, they catch a bid, I ain't looking to short anything. I'll be looking for bullish trades. If we roll over and we're back under that daily 21 EMA, I'm not looking to get bullish, right? We're in a downtrend. We don't want to hang out under that daily 21. So don't marry your ideas, guys. Marry your rules, and as far as I'm concerned, marrying these pretty colors here on the big 3. So that's how I see it for now. Post-Fed, post-Google, Microsoft earnings, the bulls have got some control. The theme as of late on these Fed days has been, you get the knee-jerk reaction, then the real test is the following day. So We'll see what the market's got in store for tomorrow, guys. But before I cut you loose here, show you a couple of charts that I think I think are poised to make nice moves to the upside, if and only if the market can hold up here. So we'll dive in, we'll take a look at a few, then I will cut you loose. All right, guys. First spot is going to be XLE, the energy sector. Pretty straightforward. Cleans up the daily structure. We're back above that daily 21. We've canceled out every single sell signal. We got a daily squeeze of the positive histogram, and now we got the 30-minute, 15-minute, 5-minute big three buy signal. Some decent structure with a couple of lower time frame buy signals that can trigger that rally towards +2 on the daily chart. So keep a close eye on energy. And of course, if XLE is back under the daily 21, you got to cut the idea. But for now, it looks pretty good. So XLE looks solid. ExxonMobil here, really similar stuff. Daily squeeze above that 21, positive histogram, 30-minute, 15-minute, 5-minute buy signal. Keep in mind, you got earnings coming up, though. We are in the heart of earnings season. But Exxon looks pretty good, guys. Devon looks pretty good. Okay. Same thing. Get back above that daily 21. Daily squeeze. Cancel out the sell signals. 30-minute, 15-minute, 5-minute chart goes bullish. I like that. I like those lower time frame buy signals right on top of that daily 21. That's pretty much what's led to all of our profitable trades as of late. So you got XLE, you got ExxonMobil, you got Devon, and even Oxy. We got some calls on Monday, and Oxy holds up pretty good here. Now, this one's neutral for now. So yeah, I'd like to see this kind of wake up a little bit here the next few days. But as a general statement, guys, your energy sector's looking pretty good. Then you got the semiconductors, SMH. 1 hour, 30-minute, 15-minute, 5-minute buy signal. So granted, everything kind of running into earnings does make it a little bit difficult to just kind of jump in and get long. So pick your spots wisely. But AMD here, AMD looks really good, guys. Really, really good. Big push. First back test of the 21 EMA holds like a champ. Daily squeeze fires long. 1 hour, 30-minute, 15-minute, 5-minute buy signal. You got earnings on the 2nd, which I believe, based on my calculations, is next Tuesday. But if the market holds up here, I think the idea of trying to see AMD rally towards 93, maybe $95 between now and earnings, to me it makes a little bit of sense, if the structure holds up. And then, of course, you got everything going on with the chips bill, all that kind of stuff. But AMD looks pretty good here, and then NVIDIA, with a 7.5% pop-a-roo here today. Clean up your daily structure. First back test of that daily 21 EMA holds. 1 hour, 30-minute, 15-minute, 5-minute buy signal. So if the market holds up, it always starts and ends at the market, the S&Ps and the QQQ. But if the indices can hold up here, guys, I think NVIDIA into 185, 190. It's got it going on here. So energy looks pretty good. The semiconductors look pretty good. Quite frankly, guys, you could just look to anchor to the S&Ps or the QQQ. They've got a similar dynamic. Good daily structure, daily squeezes, couple of lower time frame buy signals. But alright, guys, there you have it. There is the video for tonight, and here's the biggest thing I'm trying to preach. Focus on the chart in front of you. Like anytime we get into earnings season, anytime we get into JP and the boys, the Fed, traders tend to get a little bit emotional. Don't react on emotion. React on the trend, the structure, the momentum. Follow your pretty colors. Stick to your game plan. I appreciate you guys watching. If you haven't already, go on ahead and subscribe, and I will see you in the next video. Adios.